This episode is brought to you by Katana, a DeFi-first chain built for deep liquidity and high yield. You'll be hearing more from them later in the show. Nothing said on Lightspeed is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed.
What's up, guys? Welcome back to another episode of Xerox Research. Today, I'm joined by Danny, Ian, Ryan, and Jack Kubanek. Guys, welcome to the show. How are y'all doing?
Terrific.
Doing great.
Oh, there he is. Okay.
Oh, he's in. And Carlos, our sixth member today. How you doing, Carlos?
What's up, guys?
New camera angle.
Yeah, I'm trying to set it up, but
It's kind of freaking me out a bit.
That's okay. We're used to technical difficulties on this show, so no problems there. Glad we could have such a big crowd out today. The big news, I think, on everyone's mind is Pump. The sale was this weekend. A bunch of exchanges, as well as like the Pump sale page on Solana on chain. I want to dive into that. Let's talk about it. Either, musings from people who try to do the sale, try to get in or out of the sale, differences between the on-chain versus the centralized exchange environment. It seems like one of the big takeaways here was that a ton of the sale was completed on Solana, and the exchanges really struggled to process any orders, if like a small amount, or if any, in a few cases of some exchanges that struggle to get any allocation, it seems. Does anyone have big takeaways, big highlights on this?
I have a very medium, lukewarm take, and it's that this is the first time that I can think of. Historically, if anybody gave you the option, you can either do this on a centralized exchange versus on decentralized rails, you would always do it on a centralized exchange because it's typically more performant, it's more stable. I think this is the only example that I can think of where you got fucked if you tried to do it on a centralized exchange, and if you did it on a decentralized, on Solana itself, you actually managed to get in. And I think the average check size is 500 as well. So you didn't have to be particularly sophisticated to get in. You just clicked a few buttons and got in. It was a bit surprising to me because I was very adamant that anybody who can do it should just do it for centralized exchanges, just because I thought it was going to be the best way in, but I was wrong and I'm suffering because of it.
Yeah, it looked like so being US based, I could not participate in the Pump ICO, but just from what I followed, it looked like Bybit had some issues with basically it says that the token sale was oversubscribed due to an issue with their APIs. So some people received their allocation and others didn't, which not a good look for Bybit, I guess. Speaking with someone who was involved with the ICO over at Pump, the two details I got post ICO was that the median order size was $400 and over 20,000 people completed KYC and participated. So it seems like it was, obviously there was a whole private sale part of this. So it's not like this is uber grassroots, only small checks, because this was just the ICO part of it, of people who didn't get in on the private sale. Although we do know that the private sale and the public sale happened at the same valuation, which is kind of cool. And over 20,000 people is a substantial number of different people. It's not huge, but in a heavily botted space, over 20K people doing KYC means 20,000 unique individuals. So I think both interesting details that I'm hearing. And obviously, yeah, the note that it all happened on Solana rather than Sexes seems like kind of a sea change moment. It's hard to think of another instance where the blockchain route was much better for an ICO or something like this than centralized exchanges were.
Yeah, potentially a fork in the road. I think it's big egg on your face for the centralized exchanges. Let a lot of people down. It's very easy for a lot of people internationally to switch between exchanges. None of them have huge volume advantages that participated, right? It's not like they're Binance. So I think I wouldn't be surprised if there was substantial reputational damage here. But no, it's super exciting to see it happen on chain. And I don't know, maybe we look back and this is a moment.
Yeah. I legitimately think that Bybit got zero allocation. Like people who had their orders come in like at 20 seconds, they still got their orders canceled. Like I went through Bybit, orders appeared as pending for like 4 hours, and then they were all just unsuccessful, and you just had to like withdraw your money basically.
It seems they know, like these teams are aware of the misstep. Like we've seen Kraken as well. There's been like emails, snapshots going around of like, we know you tried to buy the sale and could not. We're going to airdrop you some freebie tokens after this token, the market goes live. Maybe realizing a little bit of like a failure or misstep on their end, try to not completely lose maybe some customers that are put off by this event.
Well, to make it right, they decided to airdrop everybody who didn't get in 20 United States dollars, which is fantastic.
Yes. What's better than 20 United States dollars?
Nothing.
21 United States dollars.
Perhaps 20 invested into Pump at a $4 billion valuation.
Yeah.
Danny, weren't you tweeting over the weekend that the valuation on Hyperliquid or something now implies like a much higher than $4 billion valuation?
Yeah, the pre-market's priced at like around a $6 billion FTV. It might be a little lower than that now. Box pulling it up.
It's really crazy how much volume has been taking place on Hyperliquid for Pump as well. That's
Okay.
like really just nuts to me. All of the price discovery for it has been on Hyperliquid.
Can I say something?
Speak freely.
Without Ryan getting this is, I think a lot of the time I'm not going to argue about like the valuation and whatnot, because everybody gets their own opinions. That's the whole point of the market. But this is the first instance I think I've ever seen of a decentralized exchange being able to facilitate, Ian, as you said, price discovery. Like,
yeah.
And I think it speaks a lot to like you said, Ryan. I think this is probably a fork in the road because it dispels the myth that Solana is unstable and you can't do anything on it. At least to like what a lot of .eths have said historically is that you can't do anything. You can't trust Solana necessarily because it used to have outages. We saw that it outperformed Sexes, and I think it's also speaks to Hyperliquid is that it's able to capture some volume of this. Like I think it could be a fork in the road for decentralized avenues as opposed to centralized exchanges. That's it. That's my.
Go ahead, Ryan.
No, you go for it, man. I talk all the time.
I would say if Solana didn't work for this, that's a massive failure. Like it's just people like sending USDC to an address. So like, I mean, it's like table stakes. If the chain goes down for this, it's like, I mean, there's a lot of things wrong under the hood. But I think that kind of the real test will be when that actual token starts trading on chain for spot and kind of see how much demand there is there. Cause I imagine there's going to be quite a lot, and it's definitely going to be much more of a stress test than, simple like USDC transfers.
Thanks to Katana for sponsoring this episode. Looking for the next big chain? Katana isn't yet another new general purpose blockchain. It's purpose-built for DeFi users and focused on giving the best experience possible. It does this by sustainably generating deep liquidity and high yield. If your assets are sitting idle, they're dead. Katana is built from the ground up with DeFi mechanics to bring your bags back to life. All you have to do is bridge over and Katana does the rest of the work for you. Incubated by Polygon Labs and GSR, Katana launches with a notable ecosystem of primitives, assets, and partners, including Morpho, Sushi, Vertex, Lombard, Chainlink, and Yearn. Be early to Katana. Join the pre-deposit campaign before mainnet opens at the end of this month. deposit funds, and open rewards filled with randomized amounts of CAT tokens. There's also a CryptoPunk and other exclusive NFTs hidden for some lucky depositors. Thanks again to Katana. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. Could you argue that this is maybe a litmus test for if like on-chain IPOs would work? I know that this is quite a bit different from how like an IPO would happen process-wise, but we haven't seen someone attempt an ICO in some time. And depending on how this thing goes after trading begins, if Pump is able to like continue to sustain this crazy valuation, maybe it looks more attractive to teams than going the airdrop route. And whether or not they try to do like a more equity-like thing or just bring back ICOs altogether, it feels like the outcome of once this thing begins to trade could determine whether we see more attempts to do this like Pump token like ICO. I'll be curious if there's a huge sell-off now that it's overpriced from the 4 billion where it was where it began trading. I wouldn't be surprised to see that, but I'm curious if you guys think like what are the forward-looking implications of this rather than just the Pump thing itself?
Well, I think ICOs have just been regulatory arbitrage. Like you weren't able to do IC. I think airdrops have just been regulatory arbitrage. You haven't been able to do ICOs, and then now, I think most people agree that like unless you get an airdrop and a lot of money off of it, then you realize that ICOs are airdrops are probably not the best way to use your tokens. But I think you want people to buy in, and I think you want to offer some form of allocation to retail and regular users. So I think we'll see more and more ICOs. I mean, we'll see with Plasma as well. I think if Sonar works well with Plasma, Echo, Sonar, that like trilemma thing, then we'll hopefully see more and more things launch over there.
Yeah, I would totally agree with that. I think also like just the fact that Pump is actually making money. It's like, okay, we actually don't need to shell out a bunch of tokens to users. But they cleared like it was 800 million in like cumulative revenue prior to the ICO. So it's like, but if you're a protocol that needs to airdrop to try to get some sort of like incentive flywheel going, maybe it's just a different story. But I mean, for guys like this, I think, to Buck's point, it's kind of the way to go.
I think
we're out of that twin-headed like section where it's, you don't do a sale because the SEC is going to clamp down on you. But you also maybe don't need to airdrop tokens anymore because like Ian said, if you're Pump and you're making a ton of money, like you don't need to incentivize. I mean, there might be arguments about maybe they do need to incentivize some activity given the recent push from Bonk, but that's sort of separate, I think, from raising like $600 million. Maybe they could do some small incentives to get that back. But yeah, we're out of that forest of like, hundreds of protocols that make no money that are dropping tokens on people to kind of incentivize them to come over there and drive some usage.
Also, like incentivizing usage is not a crazy thing. Uber did it like for, I think the first year when I was in university, you could take Ubers for like $2 and it was fantastic. And that was all just VC money incentivizing it. So it's not like a bad business decision to incentivize. It's probably not great to airdrop $600 million, but you can't really complain if it happens to you. So, it's like we've seen people not argue against it, but if you're allowing people to buy it in an ICO, it's also the same thing.
Yeah, I mean, there's also a difference between giving away $1 million to a user and like giving them a 50% discount on the purchase price of a product on your platform.
Yeah. Jack, there we go.
Go ahead, Jack. I know you wanted to say something.
Yeah, speaking of free money, this tweet caused quite a bit of controversy, got the people riled up. So I wanted to bring it before the council here and get some thoughts. But basically, Catherine Ross and I from the editorial team had a scoop that PumpFun plans to share 25% of its revenue with holders of the Pump token. This is notably a pretty new thing in crypto, relatively speaking. Uniswap famously has never shared its revenue with token holders. I guess Hyperliquid is another case where they are trying to kind of do buybacks and things like this. But someone tweeted only 25% Why is it not 100% of your revenue that's being shared back with token holders? I thought that was a little silly because if you give away all your revenue, then you can't pay for like the business part of the business and employees and development and all that stuff. But many people in the comments were saying, no, this is a good idea. And I mean, I think they're making the point that like publicly traded companies give all of their profit to equity holders, but that's obviously different from revenue. But that distinction aside, do like, I guess, what is a fair revenue share for Pump to make with token holders? Yeah, I'll start there.
I want to start with something that's before the concept of how much should be shared one way or the other. I think the problem that we have is that there's a distrust here on both sides of this arrangement where we've had this token and equity structure for a long time. And in some cases, sending money to the token doesn't actually mean giving it to the people holding the tokens. It might mean a DAO entity that then, operates with those funds to build out things for the protocol. Whereas the rest of the money goes to like this founding labs team. So I think there's also like a nuance here in like, they could buy back the token with 25%. They could also like create some decentralized DAO group that operates with that 25% buyback as like funding for their efforts. But yeah, I don't know. I think there's a lot of confusion over these like multiple different ways that the money can flow, right? You could just go ahead and buy back the tokens with the cash. You could give it to some group that operates in your presence, like an Arbitrum DAO, et cetera, and like pay people via that means, or the money goes to the labs team and they keep building for the sake of the protocol.
Yeah, I agree with you, Danny. I think this is more a comment. Well, I don't know what the replier intended, but I think it's more of a comment on equity token structure as opposed to like sharing 100% of revenue. That's it. Like if the Pump token only has 25% of the revenue, it's kind of mean. Like no matter what they do with that, it's not great, is it? It's like because 75% goes to equity, and that's something that.
But I kind of agree with Jack in the sense that people are not like revenue is not the same as profit, right?
Yeah.
Like, sure, you should have like 100% rights over the profits, but like revenue, it's like that's just the top line. Like you still need to account for business expenses, reinvestment, stuff like that.
Yeah, that's fair.
I did look through 0x Mooseman's tweets to see if he was just like kind of trolling Jack here, but no, he's just kind of one of those guys who just tweets a lot of like open questions.
My favorite PT guy.
Yeah, exactly. Why this? Why that? But I mean, clearly he's stoked the fire here. So
Can we bring Mooseman on the pod?
I think that'd be a good.
Bring
Yeah,
him on his own pod.
Yeah.
Bring him
That'd be a riot. I do think like the biggest issue we have today is, of course, like this dual structure, but like this distrust that the industry has kind of earned for itself. You have Uniswap, who's not, what I mean? They're enriching themselves at the expense. Like, what's the point? The token is a meme. The Uniswap token is a meme. Nothing goes to that token. There's no point in holding it. You're betting on this future chance that like they turn on some fee switch or like, that you're hoping the labs team continues to work for the sake of making the token price go up via growth of the protocol. That's a really weird bet to make, I think, when the equity exists and they're taking all the money from the protocol to the labs team. And so I think that like people in the industry are burned by that. And so when they look and see new protocols, they think, well, I want the money to go to the protocol. I don't want it to go to the equity because I don't have any, exposure to the equity. I can't get any exposure to it.
Yeah. No, and the Uniswap ends up spending that money on stickers at a little booth, or like buying out a fucking house in Tokyo to put holographic pink unicorns on it. And then they're like, oh, why are you upset?
And like, I want to be fair to the haters here because the point a lot of folks are making is like, Pump's margins are probably huge. And so they could spend like 90% of their revenue on, or they could distribute 90% of their revenue to the Pump token and they would be fine. or like they hold a sizable allocation of the pump token. So why don't they just give away 100% of the revenue and then fund their business that way? Which I don't really think you would want that. I guess, I don't know if you guys know exactly how this would work, but my understanding of how like a revenue share might happen is for tax reasons, you'd want something like an LST maybe, where it goes into like the value of the token itself rather than giving you these dividend payments. So at that point, you're asking Pump to like dump its own token to fund operations, which you probably don't want. But am I misunderstanding this?
They could just do a buyback, like what we've seen with other protocols.
Yeah.
So then, yes, they would be just selling their token to fund the business.
But like that's my understanding. It's how like every protocol funds her business. Like if they actually had like balance sheets and you look at it, it'd be like all the expenses are just like in their token itself. So then if you can actually just, to Carlos's point, like have a buyback or some sort of like market value accrual mechanism to just have everything denominated in their token. It's like things maybe look a little bit easier from that standpoint, but I mean, the can of worms gets opened initially when you find out there's even revenue to be shared. And like, it's not just like the token kind of performing, on its own.
I think the reason that the 25 or that it's rumored that there's going to be 25% buyback is, I think it's all path dependent. Like realistically, Pump should not be returning revenue. In an ideal world, it would not return revenue. It would be investing for growth. But I think that the reputation of token issuers is so poor right now that you have to give the market something, or else you're going to get punished. And Pump, I think Pump understands this, and that they announced that it was, or I think the rumor was that it's a discretionary buyback and not a programmatic one. Programmatic is so silly. Discretionary is the way it's done, right? Like you don't want to buy your token at any price. No one would. It's like a breach of, I don't know if they have fiduciary duty on issuing a token, but like to do a programmatic buyback at any price is, I would show that, the team hadn't thought about this thing, but clearly they have. They're super smart guys. So I think it's a result of path dependency and just like where we are in the market today. If tokens had a better reputation, I think they'd be able to get away with doing the right thing, which is not just, which is not returning capital at this stage.
Yeah.
Also, didn't really do anything to deserve the capital being brought to them. Like these guys built it on their own, more or less, but they have two VCs in there. So token holders, yeah, their contribution to the Pump, by and large, their contribution to Pump is yet to be seen.
Do you know the structure that they have on token versus equity?
No.
But they definitely have equity, right?
They do have equity, but it's unclear how. At least to me, I don't exactly understand how it's structured, but I do know that they have kind of the dual structure.
Yeah, I'd agree with Ryan though. Like a buyback here or a rev share it's like a bit of faith. You have to kind of give the market a little bit, because they have no reason to believe that you're going to reinvest the money for growth at this stage, because there's been zero examples of it being done in the past.
The low float high FTV tokens are really being punished. Look at the Zora launch. That thing's being punished. You have to tell the market that it's more than a meme coin at this point. And, maybe in 12 months that changes.
Thanks to Katana for sponsoring this episode. Looking for the next big chain? Katana isn't yet another new general purpose blockchain. It's purpose-built for DeFi users and focused on giving the best experience possible. It does this by sustainably generating deep liquidity and high yield. If your assets are sitting idle, they're dead. Katana is built from the ground up with DeFi mechanics to bring your bags back to life. All you have to do is bridge over, and Katana does the rest of the work for you. Incubated by Polygon Labs and GSR, Katana launches with a notable ecosystem of primitives, assets, and partners, including Morpho, Sushi, Vertex, Lombard, Chainlink, and Yearn. Be early to Katana. Join the pre-deposit campaign before mainnet opens at the end of this month. Deposit funds and open rewards filled with randomized amounts of CAT tokens. There's also a CryptoPunk and other exclusive NFTs hidden for some lucky depositors. Thanks again to Katana. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research.
One of the other big question marks maybe beforehand was what assets are people going to sell? Is this going to be a liquidity suck on the trenches or on other tokens? We do have from our boy OX Sharples some data on sourcing of funds. And some of the big stuff just shows that, I mean, there's a little bit of a split here across dexes and sexes and then some unknown addresses that got in. One call out, Jack, on that like average $400 buy-in was that there was one address that funded 500 addresses with 200K and their average amount purchased was that $400 number. So there may have been some weighting into that. The realistic like average purchase amount might be much higher. And it could be that like maybe they're anticipating some bonus for like smaller purchasers for whatever reason. Like maybe there'll be some bonus airdrop or something after the fact. Who knows? That must have been some kind of motivation there for them to do that.
Interesting.
Yeah, I looked into that with Dan yesterday. It was one of those fun moments where I had like 20 Arkham Intel tabs open. But it looks like that's just a like industrial scam farm, more or less. Like the guy's done it with like 2 other protocols before then, where just like sends out a bunch of tokens to different addresses, tries to buy those tokens in like the pre-sale or whatever, and then essentially just like funnels all the money back to the original address. I think here they're just trying to like essentially test how good PumpFun's token distribution DD is going to be, because like if they can just get some like extra tokens here, I think it's a win for them. Worst case, they lose like 200K, but from their history, it looks like they've been, kind of at this game for a while. But yeah, I'm also curious how much that skewed the median amount of like deposits there.
Why would they lose 200K?
Well, if they can't get the tokens and the tokens, or like, because they sent the USDC to a bunch of addresses and then they take that USDC, send it to the Pump ICO address. If the Pump ICO address doesn't like revert and send that money back to them, which like they don't necessarily have to, and they might just be like kind of generally unaware of it, then they lose 200K. So like, I mean, they are risking, and like that's like kind of the total amount. Like it all flowed from Bybit. So like Bybit, if you're listening, we have the address up there if you want to go check and see who this is. They've been like kind of serial scamming. So
Oh wow.
go check it out. But yeah.
Was there a max amount you could buy? Like, why was this why is this a scam? Or like, why would this be beneficial to someone to split it into smaller amounts?
$1 million bucks, right?
It was $1 million per wallet, I think. So there would be no reason to split up 200K unless you had some reason to believe that there'd be a benefit to doing it.
I think it just probably looks a little bit. I mean, it's just like the playbook they've been running as well. Like it worked with 2 other protocols, so I think they're like, let's kind of just keep it going for this one. And I think there's been other times as well we've seen protocols be like, hey, we're gonna reward like this smaller guy, and like give like a small bonus of like whatever more to addresses that deposit less than like $1,000 or whatever.
They could also. Sorry.
Go ahead.
They could also be creating like wallets for future non-pump protocols. Like sometimes you find that this happens on Ethereum a lot. I don't know if it's happened on Solana yet, but it's like if you participated in X launch or whatever, they'll end up giving you some money. So maybe it's for that. I think in crypto, you are typically rewarded for using multiple wallets as opposed to just consolidating everything in one wallet. So they might just be working off that. It just must be such a struggle though to. I don't know if you have to KYC all the wallets. That seems ridiculous.
Yeah, that's what I was going to say. If you KYC, you can only KYC one wallet. So you'd have to go around and ask like 500 different people, or.
But you can buy mass KYC in countries. It's not
Like that's what Bonk does. Bonk just buys his KYCs on. What's the website again? I forget the website.
Okay.
Anyways, yeah.
KYC.fun.
It's called kairosresearch.com. You can buy KYCs. They do all kinds of illegal stuff over there. The SEC needs to shut them down.
Paolo.
I'll share the rest of this dash that Sharples threw together though. But again, I think we can take this median pump purchase maybe with a little bit of a grain of salt if there was a bunch of mass, smaller wallet purchasing going on. But over 200 addresses put in $1 million, so that was a large chunk of the sale. Over over 200 million right there, and then good chunks of other like several hundred in the 100K to $1 million bucket. So typical like sort of power law distribution here. You get a lot of wallets at the smaller numbers and a few at the top that concentrate the sale. And then again, just that updated chart. Maybe the only other interesting thing is that you can see in here, like the pump purchase by wallet age, there was basically half of the sale was brand new wallets, funded from exchanges or wherever else. And then another large chunk, like basically the other big half, were pre-existing wallets that people had been using. So
active addresses, baby.
The frequency distribution is interesting because you would still have a median close to $500, it seems, if you were to parse out those 500 wallets, right?
If that was the only case of it happening, yeah. But if that's what I'm saying. Maybe you take that with a grain of salt. Like if 2,000 of these addresses were all, maybe it was 4 or 5 individuals that mass farmed out wallets, then it might change a little bit what this looks like. But I think you're probably right. Yeah.
What do you guys expect for the token to do following the launch?
Oh, can I make one more point first? It's just interesting to look at just on this liquidity question. If you go to like CoinGecko Solana meme category, basically everything is up like 20% plus over the past week. So it seems like the market absorbed the ICO positively, which was not a universal prediction. Some people were like, this is going to take liquidity out of the trenches or whatever.
Well, we'll see what happens. The token still hasn't launched.
Exactly.
I know it will take.
So to Boccaccio's question, what do people think happens when post-launch?
I'm long. Monday, July 14th. I'm long.
I also think it goes up. I think people will also chase betas in other launch pads. Probably. I'm also long launch coin, by the way. So hopefully.
Launch coin looks good here. The flywheel is coming.
I think everybody's long launch coin at this point. Ben Pasternak, Evelyn, who needs another bag?
She needs another bag.
She needs another bag.
I'll share something. Maybe we can look at this and consider what we think about the Gate.io PumpFun price prediction. They're saying 2025 minimum, a little over 4 cents, highest price a little over 7, and it just trends up over the next 10 years.
Holy fuck! If I hold this for 10 years, I'm guaranteed a free X.
Interestingly, like the average price here. Well, I forget, Bach, if you have the pre-market up, but the average price listed here is still below, I think, where the pre-market's trading at, which is like 5.9, 5.8.
What is this? Who's doing 10-year price predictions?
This is on Gate.io. I don't know where they must get this from their users, but
is this something that we can start doing on Blockworks Research?
That is fantastic. They're like in traditional equity research, they'll give like 1 or 2 year price predictions, and like a very stable company like Philip Morris might get like 5 or 7. No, fuck it. Let's do the 10-year price prediction on the meme coin token.
Also, if I'm reading that chart right, that's their minimum 2025 price is a 10x, right? Because it's at a tenth of 4 cents, and this is saying minimum price is 4 cents.
I like what I see in the chart.
Oh, you might be right. Are they? Unless they got the decimal wrong. They had to have gotten the decimal wrong.
Yeah.
I think they're just extremely bullish.
Because the numbers otherwise kind of reflect where things are at.
Yeah.
They're just pulled up.
Minimum 10x.
Minimum a 10x.
Oh, man. Good old Gate.
I don't know. I don't know. I think it goes up.
It's trading at 5.9. Is that what it's at right now?
Yeah,
Okay.
I think it goes up. NFA, not financial advice.
Yeah. So what do we? I guess there's some context, right? It's plus 50% from the sale. All those people are unlocked day one. So if you bought in with size, you can sell for plus 50% right now.
Well, I feel like anybody who's sophisticated enough could have just put on a short at this point, because shorts were getting paid anyway. So
Okay. A $6 billion FDV would make it the 32nd largest token. That just seems too high.
Does it?
how does
you don't
I
value
think
them based on stack rank.
It's like the second or third highest revenue generating token it would be.
Yeah, I think that's very justified. Like if you look at some of the, first of all, like a lot of those prices are fake on there. Like a lot of the valuations are like made up. A lot of those coins shouldn't even exist. So I mean, it could, honestly, it should be like top 20 if like we were being like legitimate. I think
Top 20 puts you 10 billion market cap or higher.
also circulating will be at 55% or 45%? One of the two. So it's around like 2.7 to 3.3 bill in terms of circulating, and part of that will unlock for a really long time, and the other part is like locked for the next two.
Do we have full clarity on what supply will be circulating? Obviously, all of the sale will be circulating. That's a large chunk.
Well,
but
you can look at, this is like such a difficult conversation to have because it depends on what you count. Like, I would personally not count treasury as part of circulating market cap, but I know people who will count treasury as part of circulating market cap. So it's
no, I'm not concerned about that. It's more like our insiders unlocked, like VCs, anyone else that purchased in previous rounds. Are they unlocked on day zero or no?
I think 1.3 billion at 4 bill is unlocked at day.
Okay, so like a third.
600 times 600 plus 720. So 1320 divided by. So 33%. Round it up to 35.
Yeah, so if it's 6 billion FTV, then it's a $2 billion market cap coin.
What is launch coin at? What is the parity?
Launch coin's in like 100 million something.
I think it's like, yeah, probably a little closer to 200 now.
But we have a big week coming up. We have Pump, we have Plasma, and then we have one more thing. I'm trying to think. Right? We have World Liberty Finance doing something.
Anyone getting that?
No.
Yeah, the governance forum has lots of activity for World Liberty Finance. Lots of activity going on over there. Unironically, like it's the most votes and comments I've ever seen on anything ever.
Are there like notable crypto people participating, or
for define notable?
Someone in this chat would know them.
Notorious or
Yeah. Probably more the latter. Some things better left unsaid.
I just wanted to get this out. I ran some quick math. Like, so even at PumpFun's current run rate, like the past week where they've lost some market share to Bonk, which is like roughly 500K a day in revenue, and you take into account a 25% rev share, if they're at a $2 billion circulating market cap at launch or list or whatever you want to call this, then that implies like a 44 multiple. It's not insane. Not for crypto.
I don't know. That doesn't sound as attractive as I originally thought it was.
It doesn't sound as attractive as when the revenue was 2x higher a week ago, but
you're saying the burn on the recent step down in revenue, annualized burn on, is that 40?
Yeah, I took into account their revenue from the past week. Like if this were to continue, then you're looking at a 44. Obviously, you could chop that in half or more if they were to return to those prior numbers.
It's pretty interesting.
We have upside on that.
I'm as I spend more time in markets, I'm increasingly of the belief that more data actually hurts a lot of people. Like to get daily revenue data is like a curse. If you had daily revenue data on like, I don't know, Google as a startup, you'd probably find a lot of reasons to be bearish. in reality, you just want to look at the bigger picture. And I think that, perhaps a lot of people are doing that with a lot of different things in crypto today, on both the upside and the downside. You guys saw in the chat this morning where I'm like, oh, Drift's perps revenues are at all-time highs. Like, does that matter at all?
No.
It's 1 week worth of data. Box says no. So it's like death. It's you can really tie yourself into a pretzel just looking at the daily data. I think it's better to zoom out with respect to Pump. They have a great brand, and that probably matters more for the next few months.
I also think with crypto in general, like nature of open source technology, it's like everything consolidates into a capital game. And yeah, like with Pump having like, a couple $1 billion cash, assuming they didn't just dump all of the money they made from revenue already, which I don't think they did. I think we definitely would have seen that show up a bit more.
Well,
go ahead.
they sold 800 million SOL into US.
You think they sold 800? You think they sold 800 million SOL?
Yeah, not 800 million SOL, $800 million.
Yeah, $800 million is. I don't. Why? Why do you think they did
it off using Kraken?
And this is one of those examples where I think knowing too much hurts. Like, oh my God, did they sell the SOL or sell the SOL? Like, people are arguing about it all day. It's like, in actuality, they made a ton of money, and that's probably the only thing that matters.
Wouldn't that be a great argument though? Like, if we go back to that prior number, like if it's at 2 billion market cap circulating, and you're telling me they have 2 billion in cash.
Yeah, like if they have 2 billion of cash, like
you like, let's trade it on the MNAV. Like, let's run this thing to 10x MNAV right now. It's a treasury co.
Yeah, no, seriously, but yeah, I think having that much capital is just like a massive win for them already. Because like, what is Bonk doing differently from the, let's say like the product standpoint? I'm not really sure. To my understanding, it's like there's a large part like the slop supply chain, the slop industrial complex, if you will, where it's like you have the deployers that are going to like a new platform now and just like spinning up a bunch of new tokens over there. And I think like there's not a lot of chatter about that because it's like pretty unknown, like who these guys are, why they're incentivized to go over there. Like, is there a rev share deal? And they seem to leave right as it was confirmed that like Pump people were not getting any sort of IC or airdrop. So I think there's something to watch there. But like in general, if you have like 2 billion of cash, you can incentivize those guys to come back. I don't think they're necessarily like ideologically aligned. I think they're probably profit aligned. And I assume that Bonk is doing some sort of like incentive share with them, but competition's good nonetheless. But what's up, Bach? I love how you raise your hand. You're always the most polite one on these podcasts.
I want to correct myself. They have not sold their SOL. They just deposited into Kraken, probably just to hold it there and not do anything else with it. So just FYI, because I don't.
There's no way to, like, if you don't want people to see what you're doing with your funds, you usually move it through like a centralized exchange and then come out. It's like they're the new Tornado Cash.
I don't know. I prefer to see the worst in people personally.
I don't even think selling. I don't even think if you make $800 million of SOL and you're selling it, it's like, are you morally wrong for selling? No, not at all. Like, you're literally just like putting your. Yeah, there's nothing wrong with that at all. It's not extractive. I just kind of disagree with like that term in general. I think we just kind of like lost the definition of it because like it's not like they're taking it and they're going and buying like, I don't know, Australian beachfront property, like we've seen, maybe some other folks do. Like, to our understanding, like they're still like building this. These are like young guys.
The difference here is that there's one team that is shipping free mill into the native token a day, and there's another team selling free mill of the native token of their chain a day, and that's really just a big difference here. But agreed.
One of them is a tremendous waste of capital. The other's prudent.
Yeah. And one of them is going up. And the other
The other one isn't live
You
yet.
said that you said that they're both.
The other one's plus 50% in pre-market. What do you?
one of them's 25x. And we don't have to talk about this. I've already given.
No, well, I don't think we need to pit Pump and Hype together. I think there's actually a little bit of a beautiful combination going on with pre-market on Pump token and this combination of memes and perps, as we've seen with Phantom, Axiom. Like they're all jumping on this bandwagon. I wanted to get back to we were hinting a little bit at like the Pump versus Bonk or Raydium. It's sort of one and the same at this point. Kind of battle right now. And I think maybe one of the big things that sticks out to me is like Raydium going after being like the back end, basically, because they're employing a strategy here that's maybe relatively similar to something like Hyperliquid's Builder Codes thing, where they want other brands to launch launchpads using their stack and capture a portion of fees there, which is what Bonk has done. And there's been some other ones, but Bonk is really the only one that has traction behind it. As we've seen from token creators shifting from Pump to Bonk. I think that opens up the question though, like if Pump wants to be the front end, that seems to be their goal, right? They want to do live streaming, they want to do social, they want to tie it all in with the casino. The longer term like growth sort of upside there feels more meaningful to me than being like this back end that's taking bips. I don't know, what are your guys' thoughts?
I think it's the perfect strategy for Raydium because Raydium could not handle being a front end because their front end is horrible. But I agree with you that it probably pays more to be a front end than to be a back end. I just think that both are semi-viable strategies. Like I think like the Raydium angle probably works better for them than anybody else.
Another thing is like launchpads are basically a race to zero from my point of view. Like, why do you need 1,000 launchpads? Like, you don't even need like 5 launchpads. Like, you have Pump, maybe a few, 3 or 4 differentiated more, and then that's it. Like, why do you need more than that? Like, it's not logical. Like, it's like Hyperliquid, right? Like, you don't need like 1,000 perps exchanges. You just need like 1, 2, or 3, right? It's like it will consolidate around a few brands, basically.
I agree on the launchpad thing, though. I do think, given the path dependency of launchpads, that you need a few, because I think they cater to different capital bases. I think it's going to be really hard for Pump to turn on like to cater to more sophisticated capital, given just its reputation. And I wouldn't say that Pump has. Look, I think very highly of Pump, but I think it'll be really hard for them to cater to like traditional technology markets, given where they're coming from. So I do think that there's an opening for a more buttoned up, legitimate launchpad. I think it'll be tough for Pump to bridge that gap. But yeah, totally. Yeah, to have more than 5 seems like too much.
What is a buttoned up professional launchpad, Ryan?
Launchcoin.
He's both posting your bags,
But it's like famously not. So what would
What
that
he
look
do
like?
Ben Pasternak is launching Slack and Discord integrations this week. It's buttoned up.
Oh, I'm sorry. I didn't realize. But no, like every meme coin trades like a meme coin. So I don't see how you have a meme coin launchpad that isn't unserious.
Well, the point is to not be a meme coin launchpad.
Yeah, exactly. It's not that everything should be a meme coin launchpad. It's that there should be some curation layer that allows different types of projects to launch.
Yeah, completely agree.
I think if you believe in the believe thesis, the launch coin thesis is that actual businesses and startups will launch tokens on chain and do a Pump like or other token like thing where they share some revenue of that product with the token and make it more of an equity like thing, though not necessarily an equity.
Yeah, Believe is coming from an interesting angle that they have the meme coin thing. But if you go to their website, like they have I forget what they call it, like the Builder Believe book or something like that, where they like tell founders how to launch coins or launch meme coins for their project. I don't know if it's the right move, but I think directionally you need some curation layer. People want that. A lot of people won't participate if they don't have it.
I do think we're at that stage where the famous Boccaccio maxim comes into play, where V2 is greater than V1. I think in this case, we're probably at the point of wanting V3 over V2. Some conversations I've had just like with some of the, whether they're founders or whoever in this space, is like there's still a hesitancy here to launch a crypto token. It's seen as very risky. And so like if you're already taking a lot of risk by making a startup, it's questionable that you'd want to compound that today. They're not seeing like enough confidence out of a platform like this yet. So I do kind of agree with Ryan's point. Like we probably need a little bit more buttoning up.
My lukewarm take here is that I think it makes more sense for Echo or Sonar to act as this buttoned up token launching or like whatever ICO retail, allow retail to buy platform, as opposed to whatever we launch on Solana. That's like, I think it's probably more palatable for founders, for VCs, for retail. I think it'll probably work better, and I see that as being like as filling in that gap as opposed to launch.
I mean, I also think it's path dependent, right? If you get one reputable launch in the leave, then others may be more comfortable, and then you get more and more and more launches. But I also see the point of like just going to Echo and do it like a more like, because you actually get exposure to the equity side of the business in that case, and that benefits both founders and the like ICO participants. So I see both points. But yeah.
If we say path dependent one more time, my parlay is going to hit. So let's make it to stay, okay?
All right, I'll hit it for you. I think the interesting part for the on-chain, like fully on-chain ones, is this regulatory arb here, avoiding KYC, and in the US, if it's like being an accredited investor, hitting certain status milestones to participate in sales, there's like a value there. There's like a latent demand clearly from this like retail audience that just wants to bid these things. And so I think if you have to build a platform that loses that, you kind of miss out on a big piece of the puzzle there, because obviously the people who can participate in angel rounds and private deals today, like this isn't like a blocker and a limiter for them. So I do think it's tough. And I think that's where maybe some path dependency comes in. Like Carlos mentions, if you get one really interesting founder and you let retail that loves this guy on Twitter or whatever come in and buy a piece of his token, and he shares some, revenue with it, and then grows his company 100x, like that's a great outcome and would probably drive more people on chain.
Yeah, I think if Plasma does well, though, we'll see the opposite, where like a lot more people go on Sonar and Echo, so it'd be path dependent. Yes,
just slam.
The answer is just more sales, more ICOs, huh?
Like
This episode.
Sonar just seems more crypto native to me than
seems more what?
more crypto native in a way.
Yeah.
Like I don't think many people outside of crypto know about Sonar, whereas Believe is just like Pasternak is very well connected in Web2, so he kind of has like that edge with his network.
I imagine Kobe's better connected than Pasternak. I'd wager that.
There's one point we haven't touched on regarding Pump that I wanted to bring up, which is their acquisition of KOL Scan. Around the time of leading up to the ICO and stuff, there was kind of this like narrative, this narrative train around Pump that was fun to riff on. I think Wart had a tweet that was like, at this point, I don't see why Pump can't compete with Saudi Aramco. Like this thing is going to take down LinkedIn and Discord and TikTok all at once. And so it was interesting to speculate with all this capital, what is Pump actually going to do? And their first acquisition to me was a pretty disciplined one, I guess you could say. KOL Scan, essentially, to my knowledge, just sort of a platform for copy trading. You can see what profitable wallets or well-known wallets are doing and follow them and track them. And there's like a leaderboard integrated as well. But it basically just takes Pump a little deeper into the like social media for meme coins thing. It doesn't build out their live stream business much or anything like that. But I'm curious what people's takes were seeing that acquisition happen.
Well, I thought it was going to be Axiom, and then I brought that up, and Ryan said I was because they could never afford buying Axiom. But I don't really see the KOL Scan thing because it kind of looks like a vibe coding project from 3 months ago. So I'm sure that people actually use it, but I don't really like. why wouldn't they just? I don't know how much money they spent on it, so it's obviously dependent on that. But I don't really see why they wouldn't just try and build that in house as opposed to. It didn't seem like a huge engineering lift to me that they had to buy it, and I don't think that it would have better network effects than if Pump were to launch something of that sort on themselves. It's just like, we don't know. So it's
Here's
Yeah.
some details. It has a token. Prior to the announcement of them purchasing it, it was valued at less than 300K. So I can't imagine they spent very much money in this acquisition.
And the most random Twitter accounts leaked it. It was like after the fact, it would be like X account with 80 followers being like, hearing Pump acquired KOL scan more shortly. And they all got it right.
Do we have any evidence that Pump has historically not been shrewd with their capital?
I don't think so.
Yeah, so I'm going to assume that they paid a fair price and that it was, a smart acquisition as opposed to like blowing money.
I wouldn't say they're blowing money. I just felt like it was going to be a bigger thing when they announced it on their Twitter, and then it was chaos.
Well, a splashy acquisition, I would say, would be bearish. Like, I think a lot of the things in crypto you can build mostly yourself. So for them to buy a 300K market cap project, I think is pretty. If there were rumors that they were trying to buy, a large Telegram bot or something, I think that would show a lack of discipline. But I think, I expect them to be pretty shrewd. I think that they know what they're doing, or at least we don't have any evidence that they waste money.
I don't understand why it would be bad if they, let's say, went out and bought Photon for whatever.
Makes too much money.
What?
It makes too much money.
Not Axiom, but Photon. Like, I guess
Photon's top earner still. I assumed the same thing. I had said Photon a few times publicly, assuming that it was irrelevant now, but it still prints. It's still a top 15 app by on-chain revenue. Even though Axiom's, seems to be blowing everyone out of the water, Photon's still bringing in a good amount of cash. So I don't think that they could. And I don't think
you could go down that list a little bit though, right? Like a Bloom, a Nova.
Yeah, they
still make decent money, like maybe $1 million a day or something like that. But you could probably get one of these for cheaper. I mean, they don't trade at high multiples just given how cyclical and like low defensibility there has been in this category.
I don't know, but still bringing in a million a day.
Who? Axiom?
I think you have to go really far down that list to find something that's kind of more or less dead.
Oh, sorry, I tossed out a trading volume number. So if you're doing $1 million in trading volume, you're making very little money.
Gotcha.
I think
which
that, like,
in your
the rivalry,
feature parity. Go ahead, Jack.
The rivalry between Axiom and Pump is an interesting one. Much more interesting to me than Pump and Bonk Fun. It's like two sets of cracked 21-year-olds who like built these apps that became just unbelievably lucrative very fast. The Axiom guys are like 21, 22. They dropped out of UC Davis or something and went through Y Combinator. Kind of the same for the Pump guys. So an Axiom acquisition would have been fun. I don't think Axiom would want to be acquired though by Pump. There's like almost like, outside of the money of it all, Axiom maybe tries to portray itself in a little more buttoned up of a way than Pump does, which is very like zeitgeisty, like meme posting on its main Twitter and stuff. So, but as I think about it, there's like kind of a fun narrative there where it's kind of two similar sets of very young founders who just have so much money now, and how are they going to battle going into the future?
That's the most exciting like kind of competition in crypto today is Axiom versus Pump. They both have very they're the two best apps, and they're in direct competition with one another, and we'll see what happens.
They also notably like Axiom raised no venture funding outside of the YC check, and PumpFun raised like pretty little. So they're also both just kind of not these like typical crypto heavily VC backed things. So there's a fun aspect there too.
Didn't Pump just raise 1.3 bill?
Yes, but not from like venture investors.
Sure, but that was an ICO in it.
Well, but they also raised 720 from investors, from VCs.
From private investors. They weren't necessarily VCs.
Whatever, private investors they raised. Well, it's still
It's
a lot.
very different. It's not like Andreessen is on the pump cap table.
It's a little bit different than a pre-seed and then a
They
seed.
might
and
be.
then a-
Someone put in if the data is right that I saw, someone put in $100 million check into Pump. I wouldn't be surprised if that was a
$100 million check.
No,
I don't know if this data was right, but an on-chain guy posted a bunch of addresses and big numbers for Pump.
also, I'm sure Andreessen's a LP in some crypto funds. Probably did.
Oh yes, no, exactly. They are in funds that are in this. I know that for a fact.
So you got fact check, Jack.
No, but I think my point still stands. An ICO is notably different from raising like 100 million in venture funds. I would say, even if half of it was a private sale.
Yeah, no, agreed. But let's also not be like poor Pump. They didn't raise any money, and then they're the underdog. Like these guys raised quite a bit of capital. Both.
I think you're both right. I think from a Pump's later stage than Axiom, right? Like they did go from raising little dollars to begin with from very few professional investors, and I do think it's right to frame the most recent sale as an institutional sale.
I guess I'm also not trying to say necessarily that like Pump not raising as much VC money makes it like for the people or whatever. I think that's like a narrative that Pump wants to push that, it's not necessarily true, that they're like completely aligned with the whims of crypto Twitter or whatever. But like, I think that the VC glut of the 2021 cycle just created a lot of like the Ouroboros, like circular money, and nothing very interesting really happened. So it's like these guys aren't, they don't have VCs on the cap table who are going to kind of control the things that they do. So it's interesting in that sense where I think I had a sense with some of these older startups that their money was coming from the same sources and going in very circular ways. And what they could do was kind of constricted by who they had on the cap table.
Yeah, I think that's fair. Awesome. Great chat, guys. Any other last big takeaways? I don't have one other than I think there are actually, to the prior conversation with Ryan, plenty of trading bots falling by the wayside, not making much money. That could be probably an easy, cheap acquisition. Pump's trading app, though it's better than it was a month or two ago, is still ass by comparison. So I think they could get a big win by just getting a quick, upgrade to their entire setup and chug along from there. Otherwise, yeah, PumpFun. Pump, the token should go live today. We're going to get off this call, and I guess this pod won't go live for a few days, but we're going to see how that goes. I think maybe we'll do one more prediction here, and then we'll see if we're wrong when this goes live on Thursday. Jack, you had us on the live stream last week, and we talked about whether it'd be up or down on the year. Maybe let's just talk about whether it's going to be up or down by the time this episode goes live. So predictions, $4 billion FDV ICO. Are we going to be higher or lower when this episode posts on Thursday?
Oh, way higher.
Higher.
Way higher.
What if we set it at a more interesting number, Danny? Like we said 6 billion is the pre-market price.
Okay, will it be above or below 7 billion?
Oof.
Higher.
Above.
Yeah, where's the line? I think it's higher.
I'm not giving odds, and we're not betting on it because I'm already long the market. But Ian, thoughts? Higher, lower than 7 billion by Thursday?
By Thursday? When does it actually start trading? Spot?
It starts trading today in like a few hours on exchanges.
Oh, by Thursday?
Couple days.
I don't know, but I'd say around, I don't know, probably around where it is right now, honestly. But it's going to be extremely volatile.
You know what I think you're going to see in pre-markets? I think that you're going to see people close out positions in the Hyperliquid market just to minimize risk when you kind of like switch to this public price. So like people are going to have the kind of some people aren't going to understand that dynamic and think that the price is coming down when actually like it's just people trying to minimize their risk. And then after today, it's going to go higher once all that's flushed out.
Yeah, I think they've already been doing that. We've seen the price actually come down. It's below 6 and it was above, I mean, it tapped 7 the other day. So I think people are like concerned about volatility at sort of like market open, I guess.
Yeah, I don't want to, but I feel like I don't, you risk getting liquidated.
Yeah.
When it starts trading, it's going to go nuts.
That doesn't make me very happy. I wish you didn't say that, Ryan.
It could be
right.
said. I don't know the mechanics well enough. Like, I'm sure the exchanges are going to do a great job, or Hyperliquid is, with whatever price feed they use. But I don't know. I'm very risk-averse. I'm scared of those.
Hates it. Right now, they're using 8-hour moving averages to do funding, and the price feed is just based on the order book. So that price is the actual price. I think from what I saw, MEXC is going to launch at 5 bill FTB. So I don't know if anybody will sell though at 5 bill. Like, to me, that seems like a stupid. Like, what
Some people will sell.
You're up 25.
If you bought with the intention to sell, then you'll sell. I mean, here's the thing: is the sale went live when the pre-market was trading at 6 billion. So I mean, if you bought in with size with the intention to just capture that gain, then there may be some.
Yeah, but who sells at a 25%? Are you not afraid to disappoint your?
There's different types of investors and traders out there.
25, if you want a 25% gain, go trade equities. Don't trade stocks. Doesn't make any sense.
All right. Let's close it out there. I'm going to go ahead and say below 7 billion by the time this episode posts. We'll see if I'm right or wrong. I'm long right now, so maybe I'm going against myself.
When does
This episode comes out Thursday.
Yep, this episode will be released
I think
Thursday.
we'll be above 10B.
Yeah,
Wow.
12 bill on Thursday. Short into weekend capture, and then 40 bill next month.
All right, we covered the whole price spectrum here, I think. So we're gonna find out on Thursday who was right, who was wrong. No money will exchange hands except for anyone that was already bidding on the pre-markets. But thanks for coming on, guys. Great up. A lot of fun bantering around, and we will see you all next time.